Welcome back everyone, and in this video, we are going over 6 dividend stocks that you should keep your eye on this week. Every single Sunday, we take a look at all the major events that are taking place over the next few trading days and discuss the stocks that may be impacted. So all 6 companies that we're looking at in this week's episode are either releasing their latest earnings, hosting a major Investor Day conference, or have a new product launch. And all of these events are expected to affect the share price of these stocks, which could lead to excellent buying opportunities over the next few days. And before we jump into the first stock in this episode, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z Investor, and every single day we talk about the stock market, going over different stocks you can buy or any major market news. So please hit that like button, subscribe to the channel for daily videos. And now we're going to take a look at the first stock in this episode, which is CVS Health Corporation, ticker CVS. They currently trade for around $74 per share, and over the past year, the company is almost flat, posting a very small 0.6% gain. The current market cap on this business is at just above $97 billion, and they're trading with a forward PE of only 9.98. That is extremely low, and this is one of the best value plays on the market right now. And their current dividend yield comes in at 2.7%. And at this level, CVS is extremely undervalued. If we take a look at a Morningstar report, they have it rated as 5 stars, which represents a significantly undervalued company. The estimated fair value per share is at over $88, and the current share price is only at $74. So that represents over a 16% discount on the company at this current point in time. And if we take a look going forward, they have a strong focus on their digital platforms. And this pharmacy giant with over 11,000 stores across the country is only expected to grow their e-commerce and continue to post new revenue growth year over year. And if we take a look, they're being discussed in this week's episode because they share their latest earnings on February 16th of 2021, and the revenue estimate for the quarter comes in at $68.75 billion, with earnings per share of $1.24. And taking a look going forward, analysts are predicting 16% share price growth over the next 12 months, and the company is rated as a buy. 7 strong buys, 14 buys, and 7 holds. And over the past 6 earnings reports, we've seen the company beat each and every time, posting 6 straight positive earning per share surprises. And going forward, analysts are expecting total revenue to continue to climb even higher and are expecting over 8% top line growth in the 2021 fiscal year. And taking a look at their income statement, each and every year, this company continues to grow total revenue. And the company's actually seen a massive spike over the trailing 12 months, bringing in $265 billion of total top line revenue. And if we take a look at their net income, it continues to grow year over year. Although they had one tough year in 2018, you can see over the long term, total net income is continuing to climb even higher with just under $8 billion in the trailing 12 months. And this company also provides investors with a quarterly dividend that currently sits at a 2.7% yield, and the payout ratio is extremely small. They're only paying out 27% of their net income in the form of that dividend. So that leaves a ton of cash left over to continue to grow and expand their business and their digital ecosystem while maintaining that dividend payment for many years in the future. So CVS is the first dividend stock to take a look at this week. This retail giant is spread out all across the country. They have a focus on growing their e-commerce platforms, and at this current level, they are considered extremely undervalued. So definitely take a look at this company going forward over the next few days, and if we see any dips in the share price, it may lead to a great buying opportunity. And now, if we continue on in this video and jump straight in to stock number 2, we have Walmart, ticker WMT. They currently trade for $144 per share, and over the trailing 12 months, the company is up close to 25%. And over the longer term, over the past 5 years, the share price has grown 118% overall, and this company has beaten the S&P 500 over that past 5-year span. Their current market cap is at $408 billion, with a current dividend yield at 1.5%. And Walmart is being discussed in this episode because early on this week, we are seeing their Investor Day presentation and they're reporting their 4th quarter results. So we have two events in one, the earnings report plus their future outlook on the growth of the business going forward, and we're expecting some big things. Taking a look, they report on February 18th with a revenue estimate of $147 billion on earnings per share of $1.51. And over the past 90 days, analysts have been very bullish on this report and have raised their earnings per share expectations 22 times and have only downgraded it twice. So we've seen a ton of upward revisions over the past 3 months leading up to this report. And you can see over the past 4 quarters, they have 1 miss, 3 consecutive beats, and we're predicting close to 9% year-over-year growth in their earnings over this latest report. And right now, Walmart has seen a huge transformation and their e-commerce platform is growing at a tremendous rate. And early on in 2020, quarter over quarter, they reported a 97% growth in their annual e-commerce sales. So we're expecting another huge report from Walmart coming out, and we're expecting over 50 plus growth in the e-commerce when they share the results later on this week. And taking a look at the analyst report, they're expecting more than 13% upside over the next 12 months in Walmart share price, and the company is rated as a buy. 12 strong buys, 16 buys, and 7 holds. And once again, over the trailing 6 quarters, we've seen 5 positive EPS surprises and only 1 miss. And annual revenue from this giant in the retail space is still expected to grow going forward. In 2021, we're predicting close to 6% growth, and in 2022, just over 6% growth for the next 2 years in the future. And right now, this company still provides investors with a consistent dividend. They yield 1.5%, their payout ratio is around 38% of their net income, and they grow that dividend at averaging 2% per year. So of course, the dividend growth is nothing spectacular, but this is the definition of consistency. They've been growing it for 47 consecutive years, and I'm almost certain that they will continue to grow it over the next 3 and hit that dividend king status. Walmart is a staple in our economy, and even during bad times, this is the retailer where every consumer goes to shop because of the low-cost products. And I think they will remain a leader in the retail space, both in person and on e-commerce, for the next few decades in the future. So if we see any dip in share price going forward because of their latest earnings report, this may be a great time to lock in this dividend aristocrat and add to your existing position or start a new position in a leader in the retail space. And now we're going to move on to the third stock in this video, and that is Pepsi. Ticker PEP. They currently trade for $133 per share, and the company is down over 8% on the trailing 12-month chart. Their current market cap is $184 billion, and they're trading with a forward PE slightly above 22. And the company's current dividend yield is at 3.06%. And I personally believe that Pepsi is at a very attractive price point at this point in time. Taking a look, the company reached a high of $148 in December of 2020. But from that high point, over the first 6 weeks of 2021, we've seen a continuous downward trend, and the company is now down 10% from that previous high. So right now, I think we're at a very attractive level to add to Pepsi if you already own it or to start a new position in this consumer giant. And I personally plan to buy more over this next trading week. And Pepsi is also presenting at the Consumer Analyst Group of New York. This is a major event where all the leading consumer companies come together and share presentations on the future outlook of the market and their individual companies. And as a whole, we have some of the top names in the consumer space presenting over this next week. And Pepsi's personal presentation is on February 17th, and I believe they're going to share some future outlook not only on their business, but on the overall snack and beverage industry going forward. And another aspect of Pepsi's overall business that I really enjoy is the fact that they're creating a new company in partnership with Beyond Meat to focus on plant-based snacks and drinks. I think plant-based is one of the strong futures of food, and I think as a whole, the new clean and vegan alternatives are only going to grow in popularity, and the fact that Pepsi is teaming up with a leader in that space gives me a ton of confidence that they will be able to attack that sector with great success. And now if we take a look at the analyst report, they're predicting more than 14% share price growth over the next 12 months, and Pepsi is considered a buy. 5 strong buys, 7 buys, and 9 holds, and over the past 6 quarters, we've seen all green EPS surprises. And for the fiscal year of 2022, we're predicting over 10% total revenue growth from this consumer giant. And taking a look, They have a current dividend above 3%. Their payout ratio is extremely sustainable, only making up 67% of their net income. And over the past 5 years, they grow their dividend at just below 8% per year, and they've been doing that for 48 consecutive years. So another leader, one of the strongest dividend companies on the market, on a 10% decline right now, a 3% dividend yield, very sustainable payout ratio, some beautiful dividend growth, and 2 years away from becoming a dividend king. I think everything for Pepsi right now is very attractive. So I plan to buy more of this company going forward and definitely keep your eye on it over the next few trading days. Stock number 4 in this video is ticker WM Waste Management. They currently trade for $113 per share, and over the past year, the company is down around 10%. Their current market cap is above $47 billion, and they trade with a current dividend yield of 1.92%. But over the longer term, this company has performed extremely well, growing by over 109% over the past 5 years. And Waste Management is a company that will always have demand. Consumers are always going to produce waste, and this company is diversified across the country, and their waste management systems are almost irreplaceable. And taking a look, they're included in this week's episode because they're reporting earnings on February 18th. We have a revenue estimate of $3.95 billion and earnings per share of $1.09. And taking a look, this company continues to slowly grow revenue year over year. There's no fast exponential growth, but as time goes on, their business continues to expand, grow their operations, and each and every year, the total top line continues to grow. Of course, we have seen a very small decline over the trailing 12 months. The pandemic has almost impacted every business on the planet. And taking a look though, net income continues to climb year over year, posting some nice profitability from this big industrial company. And taking a look at their analyst report, we're expecting close to 15% upside in the share price over the next 12 months, and the company is considered a buy. 4 strong buys, 5 buys, 6 holds, and 2 sells, and over the trailing 6 quarters, we've seen nothing but green, positive earnings per share surprises. And going forward, for the full year of 2021, we're expecting the total revenue to grow at 9%, and if we take a look at the company's dividend, that 1.9% current yield only makes up around 55% of their net income, and they continue to grow it at over 7.2% per year, and their dividend growth streak now sits at 17 years. So another company that's been around for a decent amount of time, they've proven to investors they can reward them with a growing dividend as time goes on, their income continues to grow, and they operate in a business that I truly believe will always be in demand. We're always going to produce waste, and there's always going to be a need for a company to manage that waste and dispose of it in the proper manner. So definitely take a look at WM this week. They share their latest earnings, and with a strong history of beating EPS expectations, we may see some short-term growth in their share price with some positive news. And now jumping over to the 5th company in this episode, we have ticker PG. Procter & Gamble, another consumer leader that is only up around 3.3% over the trailing 12 months. Their current market cap is at $314 billion, and the current dividend yield on this company is at 2.48%. Over the past 5 years, their share price has grown by over 57% overall, and they're included in this week's episode because they are also presenting at the Consumer Analyst Group. And like I mentioned, this is one of the leading events for the major consumer brands. And of course, Procter & Gamble is one of the largest consumer companies on the planet, and they present this week as well. So right now, PG operates in 10 different business segments, and their products are the #1 leaders within each different segment. And as a whole, I personally am a huge bull on Procter & Gamble, and I think they will continue to grow for decades in the future. They are just too well diversified. They own products that are necessities, and people are going to continue to buy them every single year, every single month, no matter what happens in the economy. And as a whole, I just love their business. I'm a complete bull. I own them in my personal portfolio, and another company who's a little bit on a downward trend as of late, and I might buy more and add to my existing position. Analysts are predicting close to 18% share price growth over the next 12 months from this current level. The company is considered as a buy, 5 strong buys, 8 buys, 10 holds, and 1 strong sell. And once again, a very strong history of beating analyst expectations for earnings per share. And the company over the next 2 fiscal years is expected to continue to grow their total top line. For 2021, we're expecting 6.4% growth, and by 2022, 10% overall growth in their annual revenue. And this company has a huge dividend history, a 2.5% current yield, making up only 55% of their net income. They grow it averaging around 3.5% annual rate, and they've been doing it for 64 consecutive years. They are one of the longest active dividend growth streaks on the market, one of the strongest dividend kings as a whole, and I believe this company has no signs of slowing down anytime soon. If we just take a look at their income statement, year over year, total revenue continues to grow. It's not at a tremendous rate, but still, this leader, a $300+ billion company, a 64-year dividend growth streak, a consumer giant, continues to grow year over year as time goes on, and no matter what, I think their annual revenue is only going to grow at 2 to 4% per year just based on inflation alone. Over $73 billion of total revenue in the last year and bringing in close to $14 billion in total net income. So definitely take a look at PG this week. They're on a slight downward trend similar to Pepsi. They're both presenting at the Consumer Analyst Group, and I think as a whole, this may provide us a ton of positive outlook going forward and bring back some strong investor confidence. And now finally, we made it to the sixth company in this video, and this is ticker SO, the Southern Company. They currently trade for around $60 per share and are in the red by 12% over the past year. Their current market cap is above $63 billion, and they trade with a forward PE of 18.8, and this is a very high dividend yielding company on the market right now, and their current dividend yield is at 4.26%. And they are in this week's episode because they report earnings on February 18th, 2021. We have a revenue estimate of $5.7 billion and earnings per share of 42 cents. And right now, if we take a look at the Morningstar report, this company is expected to be trading at right below their fair value. At this $60 level, they're trading exactly at their fair value estimate from Morningstar. So if you want to buy a strong company for a fair price, definitely take a look at Southern Company. They are one of the leading utility names, and going forward, they are the definition of consistency. A lot of their revenue is regulated, so they know what's coming in each and every year in the future. Their current dividend yield of 4.26% is extremely high and very attractive for those income investors. And right now, their payout ratio is above 80%, which is on the high side, but for a utility company with very predictable cash flows, this is not a bad sign. They grow at averaging around 3.4% per year, so slightly outpacing inflation as time goes on, and their current dividend streak is at 19 consecutive years. So they are actually approaching that dividend aristocrat status, and I'm sure and confident they will hit that over the next 6 years in the future. So definitely take a look at Southern Company if you want some higher income right now and not really worried about some share price appreciation. So thank you for watching, everyone. If we wrap up this video, we went over 6 different companies to take a look at this week. All 6 names provide investors with a quarterly dividend. We have some dividend kings. We have some well-known established retailers. And as a whole, this video kind of made up of 2 different sectors. We have some earnings reports from some of the largest retailers like CVS and Walmart. We have an investor day presentation. We have some different presentations at the Consumer Analyst Group. And as a whole, a nice diversified list of some of the strongest companies on the market to take a look at right now. So thank you for watching, everyone. I am the Gen Z Investor. We make videos like this every single day, and every single Sunday, we focus on the next trading week ahead. So please hit that like button, subscribe to the channel, and see you in tomorrow's video.